This video is sponsored by Stake. Download the Stake app today and use the referral code AWC to receive a free stock when you fund your account. Details in the description. Hey guys, welcome back to the channel. In this video, we are going to be talking about, you guessed it, Warren Buffett. Because he's finally made an investment. This is his first investment in the new world that we currently live in. His first major investment of the year. So I thought we had better discuss it here on the channel. And it comes at an interesting time too, because Warren Buffett has been copping a fair amount of criticism over particularly the last 6 months because of his inactivity. Like we saw what happened with the global shutdown, the market tanked 35%. And over that time, Warren Buffett was a net seller of stocks, which seems pretty staggering. But there's a couple of reasons for this. One of the reasons was that the $135 billion cash pile that Berkshire has, he said that a fair amount of that he wants to keep on the sidelines just in case a worst case scenario happens for Berkshire and they actually have to tap into that massive cash pile. But the other reason why he wasn't investing basically at all is because, quite simply, he said there were no deals that were big enough, first of all, for Berkshire Hathaway, and there were no deals that were enticing enough for them to actually pull the trigger and take action. But now that has changed. So let's talk about it. What was this investment? He sunk $9.7 billion into an investment in a company called Dominion Energy. But wait just a second, because that last sentence was a little bit deceiving, because he didn't actually make an investment into the company Dominion Energy. He didn't buy stock in that company. In fact, he made an acquisition of some of Dominion Energy's assets. So the deal was this. Berkshire Hathaway used about $4 billion worth of their cash and took on $5.7 billion of Dominion Energy's pre-existing debt in order to acquire 7,700 miles of gas pipelines and 900 billion cubic feet of gas storage. So this deal was done to add assets to one of Berkshire's wholly owned businesses, and that is, of course, Berkshire Hathaway Energy, which is run by Greg Abel. And this is a really interesting deal to have a look at because there were two factors why this deal actually happened. The first is that Dominion Energy is actually looking to divest from dirty power sources. So they were actually looking to offload these dirty power assets that they've got as they want to focus more on sustainability. And then you've got, on the other hand, the other factor is Warren Buffett has obviously got cash to deploy and is looking for great deals, and Greg Abel is wanting to make Berkshire Hathaway the biggest, most competitive company it can possibly be. So with those two factors, obviously, there was a deal to be done. And this is a really interesting example to have a little bit more of a look at the two sides of the coin, because on one hand, you've got Dominion Energy saying that they're actually looking to get away from dirty power, as what they've found more recently is that they are running into some quite severe roadblocks because, of course, these days it's not uncommon for activists or environmental groups to do everything in their power to try and stand in the way from new oil or new gas pipeline projects actually going ahead. In fact, it was only 4 days ago that Dominion Energy and Duke Energy came out and said that they were cancelling the 600-mile Atlantic Coast pipeline after 6 years of ongoing legal battles with environmental groups. They said this was a necessary decision given the legal uncertainties facing the project, aka the activists actually got him. So as a company that faces those sort of challenges where your new gas projects are just constantly being interrupted and it's taking years and years and years for actually anything to happen, for them it just makes more sense to divest from those operations altogether and just to focus on renewables more, where there's literally no one standing in your way. But then the Berkshire Hathaway side of the coin is this. They got to acquire, for a good price, they got to acquire these natural gas pipelines and natural gas storage, and that's going to significantly beef up the gas portion of their Berkshire Hathaway business. And here's the thing, whether we like it or not, the demand for natural gas over the next 10, 20, 30 years is only going to go up. And the reason for that is that at the moment, natural gas is kind of viewed as like this middleman as we transition away from the dirtier sources of power like coal and oil over to the renewables. So what we find is that the combustion of natural gas emits about half the carbon as what the combustion of coal does for our power generation. So for that reason, because natural gas can support the grid as we transition across it is literally viewed as a bit of a middleman. So yes, while coal and oil are definitely getting phased out when it comes to power generation, and yes, renewables are definitely coming up very quickly, and eventually we will just be 100% renewables, 100% sustainable power, and yes, eventually natural gas will just get phased out as well. At the moment, it's not looking like that's going to happen anytime soon, and that's why estimates for gas demand currently are only going up. Now, of course, like a lot of people, I don't particularly like this. I just wish that there was global monster investment into renewables, so much so that we could just forget about gas at the same time that we forgot about, oil and coal. But unfortunately, that just doesn't seem like what's actually going to happen. See, if you have a look at this chart from the International Energy Agency, this is what the future of energy is likely to look like based on already stated future energy policies. And as you can see, coal basically goes nowhere, oil declines substantially, nuclear goes nowhere, but gas, alongside wind, solar, and hydro, rise quite dramatically. In fact, gas has the steepest gradient after wind and solar. So from Berkshire's perspective, yes, they've acquired these natural gas assets. Eventually, yes, natural gas will be phased out as well, but that will be more of an ultra long-term thing. And over the next 10-20 years, as we just saw, the demand for natural gas is only going to go up. Thus, it seems like they've made a really smart purchase for their Berkshire Hathaway Energy business. So with all that said, it looks like both parties, Dominion Energy and Berkshire Hathaway, pretty much got exactly what they wanted, and I guess that's why the deal went through. Dominion Energy got what they wanted. They wanted to divest from the dirty power sources so they can focus more on renewables. That's exactly what they got. Berkshire Hathaway saw an opportunity to get these natural gas assets at a good price and bolster up their own Berkshire Hathaway Energy business, and that's exactly what they got. So at the end of the day, both parties seem to have won. They got exactly what they wanted. But yeah, very interesting. Obviously, Warren Buffett's first major investment in quite a while. He probably wouldn't have made a $10 billion investment in years, like literally. He hasn't been making those sort of plays in quite a while, but he's done it now. And of course, I'd love to hear from you guys. What do you think of this deal from Buffett to acquire these assets off of Dominion Energy? Do you think it makes sense? Do you think it's rubbish? Would you prefer Berkshire Hathaway to have put that money straight towards more renewable energy? That's probably the way that I would have liked to see it play out, but I think Warren Buffett's more thinking about the best possible deal. He's thinking much more about the economics as opposed to just the raw ethics of the situation. Anyway, guys, I'd love to hear your opinion, so make sure you drop that stuff down in the comments section below. And of course, if you enjoyed the video or if you found it useful, make sure you give it a like. We need to get the message out there. We need more people's eyes in front of Warren Buffett videos. So make sure you leave a like, subscribe to the channel if you haven't done so already. That'll do me for today, guys. Of course, check out Profitful. Links are in the description if you would like to learn the Warren Buffett style investing strategy. It's a step-by-step guide. It's an 8-hour course. It is completely in depth and it goes through his 4 key pillars of value investing. So make sure you check that out. Links in the description. But that will do me for today. Thanks very much for watching, guys, and I'll see you all in the next video. Thanks for watching the video, guys. I just wanted to let you know that this video is being sponsored by Stake. So if you don't know Stake, Stake is the brokerage platform that I use to trade US stocks. The reasons that I like them, first of all, they are a brokerage-free trading platform, which is awesome. And you can also access fractional share trading, which is super helpful if you don't have heaps of money. You can still get started up with your investing over in the US markets. So the Stake platform is really intuitive. It's very simple to use. So I definitely encourage you guys to check it out and download it. Also check out the brokerage packs that they are setting up, which will come into effect on July the 1st, so that you can access the pack that is right for you with your trading or your investing. Now, the other thing I'll let you know is that if you download the Stake app and you use my referral code AWC, then Stake are going to give you 1 free stock. They're going to give you a share in either GoPro, Nike, or Dropbox, which I think is an awesome incentive that will help you guys get started. So definitely make sure when you make an account, use the referral code AWC to take advantage of that free stock. So a pretty good deal. Make sure you get on it. Thanks always to Stake for sponsoring the channel, and I'll see you guys in the next video.